Ladies and gentlemen, traders and investors, a very warm welcome to our channel Polo Vega. Today we're doing a very short video on the effect of the ongoing conflict between US and Iran and its impact on the market indexes and the bourses in general when they open on Monday. Following the US-Israel attack on Iran, the Indian stock market may experience a gap down opening due to geopolitical uncertainty and potential supply chain disruptions. Rise in oil prices and the possibility of a closure of the Strait of Hormuz could weigh on the market sentiment and trigger a gap down on the opening on Monday. The oil and gas sector, defense sector, and some other sectors may be affected by the conflict, with the Indian stocks related to these sectors likely to be impacted adversely. The most important part is going to be seen in the price of gold or precious metals, followed by silver, then that of oil and gas, and then the price of the dollar vis-a-vis the other currencies which could revise their values because of the change in the value of the dollar. Investors are advised to remain vigilant and avoid panic selling as markets may recover quickly after such events. It's crucial for investors to stay informed and adjust their investment strategies accordingly to navigate the uncertainties posed by the US-Iran-Israel war. The most important part is not to lose one's cool and stay informed and take informed decisions before deciding to go for a sellout of the portfolio held by any investor. On today's video, we shall talk about the US dollar index, the oil and the gas market, and also the gold prices on different charts that we can see in the following videos. Disclaimer/disclosure. The contents of this presentation are for information purposes only. The material has been obtained or derived from sources believed to be accurate, but we do not guarantee its accuracy. The presentation is the 31st of a series of interactive videos aimed at educating our viewers, and we would like to warn all our viewers of the risk associated with the business of trading and investment securities. Investment and trading is a highly risky business, and there exists a possibility of partial or total loss of investment. The ideas and opinions in our video are solely based on analysis of the market, and we do not advise/recommend guide anyone to take any trade based on the contents of the video. We do not take any responsibility for partial/total losses arising out of trades based on the contents of this video. Traders and investors, the chart in front of us is the Dixie or the US dollar daily chart. We visited this chart in one of our commentaries about 2 to 3 weeks ago. And we wouldn't be visiting it had it been a regular situation, because we know that, and we very well know that, the index has been range bound for the last 1 year, and it has been maintaining its range between 95 and 100, and as of now, as we can see, it's right in the middle of this range at around 97.5685. But the only reason that we have to visit this chart today is to see if at all there is a revision in the valuation of US dollar by the market due to the ongoing conflict between US and Iran, and if it gaps down this evening when the futures market open, and if it would come down anywhere between 96 and 95.45, should we go long or should we wait for it to form a nice bias zone around this area or a supply zone to avoid the chances of the index breaking down below its floor at 95.5. Therefore, we would request all traders to stay away from the Dixie trade until the market decides the new direction of US dollar during the war between US and Iran. And if the conflict continues, one needs to see and observe if it's having an effect on the direction of the Dixie or the US dollar index. traders and investors, we shall take a quick look on the US oil spot chart. As we can see that on the upside there are two controlling areas, the first one being between 68 and 70, and the second one, which is the most important one, which has not been touched for a good 6 months, that's lying between 76 and 72. Therefore, because of the shortage in supply or the disruption in the supply route, there could be an increase in oil prices, and the first shock could come in the form of the oil price visiting 70 on the opening of the futures market this evening. And if the market feels that the war could go for a very long time, then it could revise the price further up to 76. But otherwise, we hope, with all technical reasons and not going on the fundamentals of economics, we feel that the first area which the oil prices might visit this evening or maybe by tomorrow morning would be 70, and then the market could reassess its valuation of this commodity and it could come back down into the 65 area. So for people who wish to go long on this opportunity, they must wait for the oil price to visit the line of 62.44, which is marked as a red line on our chart, purely because this area has been acting as a floor and a ceiling for a very long time. But looking at today's situation, it may not be able to trace back into this area. Therefore, an entry at 63.6 also could help us take a long position if at all the market traces back into this area before going up into the area of 70 or above that area. But we need to be very careful because of the chances of the market gapping up or down purely because of news that could shock the market. Therefore, the stop losses have to be very tight and as close to the entry level as possible, so that even if the market gaps down, we do not lose too much of money. Ladies and gents, traders and investors, the chart in front of us is the daily chart of nat gas. We have not had a chance to look at this commodity, or we didn't want to get into this commodity because of its range bound behavior during the last couple of years. It's been basically range bound between 2.0 and 4.0 for the last 1 year, year and a half. There has been a breakout in the month of January or towards the end of January, but then the price fell back immediately during the first week of February to its usual range of trading between 3.0 and 4.0. The only reason why we visit in this chart today is because of the chances of an increase in prices due to the closure of the Strait of Hormuz because of the ongoing US-Iran conflict, and that could lead to a disruption of the supply chain, and a shortage in supply could lead to an increase in prices. There is no technical reason why we're looking at this chart, because this doesn't provide us with any opportunity. There are no controlling candles, as we can see on the chart, on the daily chart. Therefore, one needs to see a clear establishment of a nice supply area around 4.0 if it tends to gap up tomorrow morning during opening, or maybe this evening, or maybe later with the war continuing beyond this week or further. But otherwise, there's no reason why we should take a position on this chart. Traders and investors, the chart in front of us is that of XAU/USD, which is the gold ETF daily chart. If you've been visiting our channel over the last couple of weeks, you must have seen that gold is going according to our prediction during the last couple of weeks. It has broken out of the 5100 area, which we had marked earlier on, into the nice profit taking area above 5150 and up until 500 or 5500 and beyond. As of now, the reason why we visited this chart again is purely because of the ongoing conflict between America, Israel and Iran, and the war could have an effect on gold as it's a safe haven asset, and people could get into gold as much as they can to avoid their losses on the indexes or other markets. Therefore, the area which it could immediately visit by this evening when the futures market open in the US, or by tomorrow morning when the Asian bourses open up, it could go to 5500 or like its last high at around 5600, and it could hang around in this area for a couple of weeks if the war doesn't come to an end. It's for the market to digest all the information once it opens up tomorrow, and that's when the markets could revise their prediction or expectation of the valuation of gold. But up until then, nobody should try to take any short trade on gold, as people would try to take the prices as high as possible during the weekend before the market opens. Therefore, we should expect a gap up by this evening or anytime tomorrow morning when the Asian markets open. We've got the XAG USD chart, which is the silver ETF chart in front of us. It's the daily chart, and we've been visiting this chart over the last couple of weeks almost regularly. And we have been trying to tell everyone that although silver is a precious metal, but it's got industrial uses as well, and because of its use in industries, it tends to behave slightly different from gold, which is a safe haven asset. In our current situation, where there is going to be an effect on all safe haven assets and also on the asset classes or commodities which are going to get a supply chain disruption during the next few days, and they can have an increase in their prices. Therefore, one needs to clearly evaluate their position in different kinds of commodities, metals or indexes according to the behavior of the market on the opening tomorrow morning, which is going to be for the Asian bourses and for the American future markets this evening. We shouldn't try to go into a sellout mode, because if the market gaps down or it tends to revise itself temporarily, we shouldn't panic and get into a selling mode. With silver, we would like to advise everybody to take a caution. Although the metal seems to be following the prediction that we've made in our earlier sessions, and it has broken out of the 90 area, and it is moving towards its earlier high, which was at around 120, but it's a long way off, and it could make a supply area anywhere in between, or maybe even when it touches 100, it could try to come back down for a bit and make a supply area before trying to go up further. Therefore, please do not try to implement your gold strategy exactly in replication on silver. Ladies and gents, traders and investors, we hope that you found our video informative enough and got all the required information that you wanted to with regards to the effect that the ongoing US-Iran war shall have, or the impact the war is going to have on the different markets, whether it's the commodities, whether it's the currencies, indexes, or all asset classes that could be impacted by the ongoing war because of the restrictions imposed by the war, or by the supply chain disruption, or with the revision of the price of the US dollar by the market. However, we would advise all investors to exercise caution, do not panic, and not to go into a sell-off mode immediately after the market gaps down or gaps up because of the short-term reaction of the news the market is trying to assimilate when it opens up. We should allow the market to form an opinion on respective asset classes that we have a position in, and then revise our investment strategy. Until then, please keep saving, keep investing, and keep getting wealthier. We would request all of you to please keep watching our channel Polo Vega. Please share, subscribe, and like our channel Polo Vega, and help us help you as much as we can. Thank you.